Hi everyone, yeah, we'll get going now. I've got lots to talk about this week. There's all sorts of events in Japan, but then global equity markets have also been really all over the show. In a sense, over the last 2-3 weeks, they've been off then back, and so at the moment. They're all mostly back after the big fright that everyone had. So if we flick to daily, this is the S&P.
Yeah.
Oh no, sorry, USD JPY. Damn, I always do that. Always do that, man. Yeah, so look, they're pretty much back. Crazy. So yeah, there was that big fright. So that's last Wednesday. Things were all fine Thursday, and I think the jobs number in the States might have come out Thursday, Friday, where they saw there was an uptick in unemployment. But for some reason, it sent markets into a real panic. Like it was down nearly. Well, what did it come down? It might come down like 10% or something. So it was a big sell-off. From the very high to the very bottom, it was 10%, but just say, yeah, it came down, say, 7-8%. And then, what's happened now? It's pretty much, yeah, it's down like 2% from the all-time highs. So, yeah, really interesting. The Japanese market, that took the bigger hit. That did a huge sell-off. And, again, it's sort of mostly come back. So Japan was more complex story. So they also had an interest rate event come out. So they finally decided to, after all this time, to start hiking interest rates. Basically, yeah, they did a 0.25 interest, but percentage point increase, 25 basis points, and that created the huge FX volatility. So this came down, was it nearly 30-odd%, and it's recovered again a lot. So
because your prime minister has resigned as well, hasn't he?
I know. Yeah, they're going to have elections, I think, soon. Yeah. Fushida? I can't remember his name. Yeah, because Shinzo Abe. He was assassinated or something, the ex-PM, so
yeah.
It was quite shocking when that happened, because you think of Japan as being quite a very orderly country, and to know something like
that.
Never
hear of anything like that.
Yeah, it was crazy. So, they had a big interest rate increase of 25 basis points. Yeah, and that caused the huge move in FX. So this was the real story really from Japan. The stock market just sort of followed on from it, I think, a little bit, because what was happening was the yen was appreciating. The yen appreciated rapidly over that time, and so for those exporting businesses in the Japanese stock market index, that's bad news, because all of a sudden their sales numbers start to come into question, because how do they know they're going to still be able to get rid of those units now that they're in real terms for their customers more expensive? So yeah, there was that huge move, but also the yen was at its all-time not all-time highs. That's 162 isn't all-time highs, but say since like a long time it's been since the yen has been that weak against the US dollar. So I think a lot of people are taking advantage to only go back to 03, unfortunately. But I think way back in, say, the 70s, it was even higher, and it's sort of before they went into their big boom. And so,
sorry for my ignorance, but the USD JPY, is it indexed just between the currencies?
Yes.
Okay.
Yeah, that's the price of Japanese yen in terms of US dollar, basically. Okay. Yeah, so you get 120 or 145 yen to a US dollar. And so there was a huge, that's the monthly candle, it's a little bit confusing there, but huge move down from the highs. What did it move all up? And this currency pair here, so that came down 10%, which is a huge amount for a currency, 12%. They normally don't move a hell of a lot in terms of those big things. But so the Japanese currency and interest rates in Japan are like a very interesting story in the global economy. So for a long time they've used like what's called the carry trade, essentially, where people borrow in a cheap currency, low interest rate currency, which has been the yen, and then invest in a foreign asset, essentially. But the thing is, what happens with that is if there's a big spike in the FX volatility like we saw, it causes people to have to sort of reevaluate that trade and potentially unwind it. And so quite often in the markets, when there's real, like, shit hits the fan, for want of a better word, so things get really bad in the markets, the Japanese currency tends to appreciate. It's one of the very few sort of risk off types of plays that's very, very reliable.
So reliable meaning it happens every time.
Quite in the most extreme events, it tends to happen every time, because as we were saying about that carry trade, where investors have borrowed cheap in the yen and then invested that money in another currency, when all of that changes, so when the exchange rate changes, that reevaluates that whole trade. So traders are forced to essentially buy yen to close out that carry trade. And so we see this, this is a quite common theme when the market sort of has a panic, that the yen rallies. And so we'll just look at a few examples of this, because I want to back this up, because there's very few opportunities for this kind of negative correlation in markets. It's very hard to come across this kind of thing. So in the 2020 March, so this is the COVID market crash, and keep in mind here we're looking at USD to JPY. So when this goes down, that means the Japanese yen's rallying. So February 2022, just before all the panic was about to let loose in the, here we go. Yeah, so this is the market selling off from February 20. We'll go to back to USD JPY. Just to keep in mind too that it's like the different direction, as I was saying before. But the Japanese yen rallied quickly, and then we saw as the market sort of came back, it did the opposite. It sold off again. So if we look at bonds, so maybe let's just look at gold, because it's right here, because people think of gold as like a risk diversifying asset. But let's have a look what gold did in March 2020. So we'll go back. So it freaked out. It sold off big time. Came down quite a bit. Not big time, obviously, but it did the opposite. Everyone would have wanted it to rally, but instead it came down 10-12%. Like the market. And if we went back to say like 2008, you'd find a similar sort of story. So it's quite interesting. Like the Japanese currency plays a really interesting role in global markets. But
so why is gold rallying at the moment? Like it's on an up.
So we're just looking at gold right here, aren't we? And it's just so impressive how this asset. So we also, in the 2 episodes ago, we talked about this big phenomenon in the markets following 2008 of money printing, and essentially central banks had been stimulating the economy, lowering interest rates, and that feeds into asset price appreciation. It's like when interest rates are low, generally all assets tend to go up in value. And so what we saw, like the stock market sort of normally leads that charge. So we saw over this period that gold's been rallying. We've also seen stocks rallying a lot, and stocks are generally considered from like an investment point of view a more sort of solid yielding investment than, because stocks pay dividends, than gold, because gold doesn't really actually yield anything, obviously. So, but what happens is assets are rising, money's being printed, interest rates are low, asset prices are rising all around, and we get to a certain point with stocks where there's, with the earnings of the companies having to justify the prices. So when the stock price gets really, really high versus, without its earnings, its dividends increasing, like the actual return to the shareholders, you get what's called like multiple expansion, what they call it, where price earnings multiples are expanding, meaning the price is going up, but the actual earnings that are coming from the companies isn't going as fast. So you sort of get to this point where stocks are expensive. They look expensive. So the most sort of premium asset that investors want to own, so at the moment is these big tech stocks in America that are tied to AI and things like that. So it gets to a certain point where stocks start to look expensive. So investors go to other assets. Gold is a really, really good example of that, because it's seen as very, very, very safe. It's got this huge history behind it of slow price appreciation like stocks do, and so to me, I sort of see it as there's this demand for assets with only so many places to go. And so gold is going to be like a natural benefactor of that, because it's just such a well-established, known investment class. So essentially I put gold and the price appreciation in gold into like a similar category to like the price appreciation in crypto. Just as in, it's another asset essentially that's crypto is slowly gaining a little more legitimacy, but it's one of those assets where essentially when all the other assets look expensive, like stocks and real estate and these other sorts of things, bonds and that, things like Bitcoin and that just do well. They appreciate in value because it's another asset class that's not stocks, not really, shouldn't really be correlated to stocks when you think about it, but it is, because as investors know, it's a risk asset, so it sort of gets priced like a risk asset. And we saw the volatility in Bitcoin actually pretty well match, like the actual volatility might have been higher, but as I'd say, like just the price movement around all of this like recent sort of panic that we had, that it's sort of pretty well matched in percentage terms what the Japanese stock market did with its I think we might have looked at it already. So it came down 30 odd %, and it's still down about half of that. So it behaved exactly like a risk asset, like you would sort of expect it to do.
Weird, isn't it?
Yeah. Investors they put it into the box. It's becoming more of a institutionally recognized sort of.
Is it because of those ETFs that got?
That was a big part of it. Yeah. So So last year, Bitcoin was not looking as strong. It was. What are we on here? We're on a daily, so let's go back a bit. Bitcoin, I was following at the time, and I remember seeing it coming down here. Oh, we've lost our price scale. Yeah, it's down this like 15,000 mark, and at the time I was thinking, oh wow, what's going to happen? Is it just going to wander down to zero? But like you said, there was a ETF, a spot ETF essentially announced, which meant there'd actually been futures ETFs for Bitcoin and even Ethereum for a while. But at the time, they were there was talk of a spot Bitcoin ETF. So essentially, that meant that it was BlackRock, I think, were applying, but it was many others applied. So it meant that they could essentially, like institutions, could create an ETF, and how much we have to explain, like just quickly, basically what an ETF is, because we talk about them a lot, and they're such a real key part of modern investing. They really give access to individual investors. You get access through ETFs to financial markets that were just sort of very impractical to get into previously. So before there was like a GLD ETF where you could buy gold. Previously, like you would have to look at holding physical gold or things like that. The GLD's been around for a long time, but like the stock market ETFs are another really good part. We're basically an ETF. It's kind of like a stock, like the institution, the fund or whatever, lists on a stock exchange, and they set their assets to, well, basically they hold assets by a mandate. So through their sort of agreements of how they've...
Is it like a custodianship? Or...
Yeah, sort of. Essentially, they buy assets on their and then hold them on their balance sheets, and then list their company on the stock exchange, saying we are a this asset company. Kind of like, yeah. That's in a way like our assets are exactly this this commodity or this instrument or whatever. So therefore, you price us as a company in terms of this asset. Yeah. Essentially, like that's a way to think about it. So what the companies that have the stock market index ETFs that we always talk about. So for example, VOO is one by Vanguard, but this one that we're actually it's not even an ETF that we've been looking at. We've been looking at the futures market, but say we're good at this. Go back to you. So we always look at this. This is the futures market, but the other very popular one is just called SPY. That's an S&P 500 ETF called SPY, and so there's another one, VOO, which actually has a lower management. I think SPY is State Street Capital or something like these. Maybe it was a Chicago-based outfit, but Vanguard is the other big one that issues VOO ETF, sorry, and their main stock market one is called VOO. So these companies, like the Vanguard one, essentially listed itself as VOO, holds a whole lot of the stocks that make up the S&P 500 in the correct proportions. Yeah. So they would have a huge amount of Apple, all of these other like big companies that make up the S&P 500. They hold their stocks in roughly the proportion of the index. Mm-hmm. And so essentially it means that us as individual investors, we can go buy like a tiny little stake in their fund through purchasing the ETF, and then we own like a part of their assets. Oh, okay. Yeah. So what happened with the Bitcoin ETF is essentially that, why the Bitcoin ETF and talk about the Bitcoin ETF was such a positive, bullish sentiment for the Bitcoin price was because it was a regulatory sort of framework that meant that big institutional players with credibility, like BlackRock, these kinds of people, they can now start Bitcoin ETFs. So that meant that for them to start that ETF, they have to go out and buy some physical Bitcoin. Yeah. Which means so that's why there was this huge excitement around the value of Bitcoin, because it's like all of these ETF funds now, because institutional clients can buy their ETFs, pension funds, retirement like endowments, all these kinds of things can now access Bitcoin through ETFs. Yeah. And for these ETFs to list, they have to have actual real Bitcoin.
What's the difference between the future and the spot ETFs?
Yeah, so this was the difference. Yeah. But this is like what I just described essentially was the difference in that these, because they're spot ETFs, they actually have to hold the Bitcoin. Oh, okay. Yeah, whereas previously, the futures one had to hold futures contracts in the Bitcoin. Ah. Okay. So it's not like through arbitraging forces, like the futures ETFs still were part of the real Bitcoin market, but they're not forced to actually hold the spot Bitcoin asset in their thing. So that's what created the huge demand for that. And recently, Ethereum also.
Yeah, I heard that. But it didn't go up as much as they expected. That's kind of
the price certainly didn't really, I think, respond as well. Yeah. So we saw like Bitcoin had Ethereum had a vicious sell off from all of that fear that we were talking about in the markets, like more so than Bitcoin, I think. I'll kill that too. Yeah, and it didn't really rebound as much again. So I'm not an expert on it. We had a good chat on Open Day with someone that actually had like quite a bit of experience with cryptocurrencies and Ethereum and stuff like that. But yeah, so Ethereum just recently they had a spot ETF approval granted. Essentially, where a bunch of people are going to be able to buy them. But there's been futures ETFs for Ethereum for a long time. So yeah, I don't know too much about.
I only got involved after COVID as well, when I saw all the markets and the government's pumping in money. I was thinking I should probably at least understand how to get myself into Bitcoin. So
yeah, interesting. That's smart.
Sorted myself out with a hardware wallet and got myself into it.
Yeah, it's really good timing. So you're talking like 2020, eh?
Yeah.
Perfect.
And then last year I saw everything just plummet, and now it's come back up.
Yeah.
And that's kind of led me down into the stock market and trying to take a more proactive interest into.
Interesting.
I've never dealt with any of this before, so I haven't got any finance background at all.
Cool. That's what we're here for. Essentially, started to have a community of people all kind of like that come through that. So yeah, stocks have just about as much as excitement as crypto too, if you can get it into the right odds. And so when we were last week or the week before, with all of the bloodbath and stocks, this Nvidia was back down at 100.
Do you see any changes with how Boeing has been sued for that issue with the airlines?
787
Max. The airlines kind of come up again. But do you see any issues?
Following COVID, like the reopening play, how airlines are all around the world and cruises, all of those kinds of things, they rebounded, eh?
Yeah, but I mean with the Boeing
let's have a look
issue,
at Boeing stock.
Do you reckon that's gonna take a dip again?
Let's have a look at Boeing because they've had a lot of issues. Yeah, it's that 787 Max thing. Boeing. And yeah, they're an interesting one because it's sort of a duopoly that them and Airbus have over aircraft. I think China are looking to create a Chinese jumbo jet at some stage, but it's been a real ugly stock.
The history of that, so wow, that's a massive hit, isn't it?
Just sideways, it's just gone sideways. I'll go up monthly, get an even bigger picture. So interesting company here. That is partly sort of following the excitement in the market before. When did they get their big sell-off? It must have been 19. So part of this is the COVID sell-off. Yeah, everyone's. Yeah, and it's obviously it's never come back to its pre-COVID days.
It might just take longer now.
Yeah. So stocks are a tricky one, especially buying those individual stocks. It's can be a exciting game if you look at ones like Nvidia. Yeah. But yeah, also we were talking earlier about we're trying to figure out. We're looking. So let's just go to the Indian stock market too, just while we're looking at global equities. That really didn't get a fright at all. Like really with that big shock. I think it might have come down like 5%, half off what the US market did. So it's like less volatile than the US. Man, what an awesome stock market to have been a part of. I wish I could say that I was. Yes, that sort of come almost like right back. But we were talking before about there's these two big businessmen in India with there's like Adani, that's one guy, and another one. But we're looking at this Adani Enterprises, and that's an interesting one because there was this big event, and we were trying. I think we were talking about it before, and I'd be really interested if anyone listening, to has more info on what sort of happened here and around this, because like it looks like if you're looking at it here, you're like, oh, that's a bit of a worry. It's come down heaps, and maybe it won't get back up. But I was actually having a proper look at this stock, zooming right out, and if you look at I've just lost the side of the screen. Oh, here we go. Look on my laptop. It's like if you look from, just say you bought we'll go back 2017. That thing has got a friggin' 10,000% return.
Yeah.
So it's like, even though there was this big thing here, because like before that it was friggin' 12,000%, and there was this huge event of some description, obviously, and it came back down. It's come back up, but even if you didn't panic there, basically, if you sold down here and just accepted your 3,000% gain, now it's 9,000% again. But so supporters of this guy have done freaking well, like really well. If they identified that this guy had his political connections, was savvy and smart business actor, and sort of been like, oh, I think this guy's going to be successful in 2017. Damn, you'd be doing pretty well. Now you would have turned what's 10,000% times. You would have turned $100 into $1 million. Yeah. Yeah. So he's pretty interesting. There's this Reliance too. Is that him? Is it Adani too? Or is it? Yeah. I think it might be the other guys. Like is it Amani and Adani or whatever? I'm not too sure about that. That's been beautiful. That hasn't had any. That's done much like the Indian stock market, just gone up in a nice smooth trend. I think we looked at that. So going back from that same time, that's done 500%. Like that's still freaking awesome. I can't remember what we said. The whole the Nifty that had done. Oops, sorry, I just clicked over the VIX. That's another story, actually. We'll just come back to that in a sec. Yeah, but the Nifty over that time, yeah, it's still really good, 200%. So that Nifty, so I think I actually, and I need to correct this because last time when I did this, I did a comparison with the American stock market, but I clicked on the wrong thing. It's that hasn't done as good as the Indian one. But it wasn't quite as drastic as I made it out when I clicked on the wrong thing. I think I said 60% when it was 160. So yeah, 160%. Yeah. Short amount of time. That's still real good returns in equities. And so this guy's Reliance, he's done heaps better than the US stock market. So that's pretty cool too. Yeah, the other thing we clicked on it just quickly before, but I just wanted to talk about the VIX again because this is a volatility index, and that spike there gives you an idea of how petrified everyone was last week with the quick market sell-off. Because so the VIX hadn't spiked that high since 2020.
Yeah.
It was this goes to shows just how terrified and panicky people were. Just last week or week before. So the VIX is essentially a gauge on volatility through options. So options prices are heavily determined by volatility. So you can actually sort of reverse work out volatility by options prices. And that's essentially what this is. From my understanding, anyway, it tracks the pricing of options and then implies the volatility out of that. So it can see like what would have happened is the prices for um, puts would have like skyrocketed, and the prices for calls would have crashed, like they would have been wiped out. And so in the options market, all of that action translated into an implied volatility through the VIX of a lot, yeah, of like real high, like it just spiked out of control. So this is an interesting metric to keep track of. It's not like a price, obviously. It's a different kind of measurement. Um, but yeah, it tracks volatility, and so you can see obviously over COVID it was up high and it stayed high for a while, but it has been extremely low. It's been just very low, quiet for like quite a long time. 16 just hovering around this area, and then boom. So yeah, that's another really good gauge to keep an eye on the markets, but sometimes it's behind too, like it's because it's working off the option prices. Like sometimes it doesn't really give you any insight looking forward. Like you're not like, oh, volatility's high.
Yeah.
There might be some excitement coming. It's more like it'll happen at the same time.
Oh, okay.
Sort of.
Yeah,
It'll just be like, whoa.
Nothing for predicting.
Yeah, if you hear some crazy news or something like a missile flying over
Yeah.
Japan from North Korea or something, just like jump in the VIX and you'll see a big spike like straight away.
Are you tracking any stocks in Asia other than India, like India and Japan, like Korea or?
No, not other than the indexes myself. Korea, like people ask about Samsung and that, but we haven't really felt like because it's a multi, like it's a, there's all of the divisions of Samsung. There's not like just I think like an index where you can track the whole thing, but we can explore a lot more of that. I'm interested in some of these episodes coming up. Like what we'll do, we'll pull up like the Korean stock index, we'll pull up like the Taiwan stock index, and have a bit of a nosy around in those areas and look at some of the performance, like because we've already established how strong India's been, how like lately Japan's been quite strong, but had that impact from the FX risk. So I think it would be quite an interesting thing to actually like look into some more of these other, like because Taiwan they've got TSM, which is like a superpower in this new AI age that we're entering into, and they are investing in the US as well. Like TSM are building fabrication plants in the US to take advantage of the CHIPS Act and the Inflation Reduction Act and all that money that the US desperately trying to play catch up to China in the everything, semiconductors and rare earths and all of those kinds of things. So yeah, and then we can also have a bit of a look around some commodities and stuff too, because that's quite an interesting story of commodity, like stocks is like a story of trends coming and going, AI and the dot-com bubble, like going back a bit further, and commodity markets sort of reflect a bit of that too, like like nickel prices with electrification, you're seeing like nickel continue to go up, and it's like as new technologies come online, different commodities do better than other commodities, so there's just more opportunity for profit and volatility and stuff to trade off in commodities markets and things. So yeah, we can look at global equities, so we'll start exploring a few more equity indices from Asia, because that's generally what they say, like global is generally like meaning like there's like Europe and then Asian markets. So European markets aren't as interesting or a bit more difficult to explore, because in Europe there's a lot more private ownership and bank funding of big corporations. Like they don't have as advanced capital markets as the United States. So the United States for a long time has been sort of like the home of stocks and that, and like all around the world people have tried to copy, like when they set up the exchanges in countries, like they take the best sort of what works in the US and stuff, and for what's more for their domestic market. So yeah, people, I think like India is like a really good example of how they've been able to use the stocks in the stock market to attract outside investment capital, which is helping grow their economy. And so it's a contrast, for example, with China, who haven't had as much success with using capital markets for their raising their businesses, and therefore outside investors are shying away and not.
Is that because of government interference or just the trust issues?
It's partly what you said, because if you don't have independent kind of capital markets allocating resources, you kind of effectively need the government or some sort of autocrat to help allocate the resources, because essentially, like, the capital markets do that on their own beautifully by people's incentive for profit over the long term. They stringently look for risks in certain industries and things like that. So the capital markets on their own help businesses that have value to add in the economy to get that capital to do it. And in systems where the capital markets aren't as developed, where they've been relying, for example, on the state to allocate resources in the economy to achieve sort of their objectives and stuff, it's becomes again difficult for companies that have real value to add to sort of be able to signal that through the stock market and their prices and that sort of thing. So India seems to be doing really well with that. They seem to be getting the balance right with guiding their economy from a central sort of point of view of prioritizing things, but then also incorporating the best of what the market type economy forces have to offer. So outside investors are really excited about India, and they've done really well already so far, and there's just so much infrastructure to build there. It's a really exciting prospect, because all of that needs to be built, and India is looking at doing it in ways that can make it profitable and profit friendly and business friendly. Like, they're trying to encourage outside investors to come and participate in their growth, where for example, China was not like that. It was not so much growth from the outside in terms of their exporting, sure, but also they used infrastructure and stimulus and stuff to help grow the economy, which is very, very effective, but it just only it has a limitation. It's like at a certain point, you've built all the airports, the trains are as fast as trains can go, everything's clean, everything's nice, and then what happens if you need to stimulate your economy? So that's sort of like where I see that they're at the moment. I think everyone sees that, but because India's got the advantage of having seen another country make that mistake. So India now can be like, okay, we know we need to not do like what China did with our own infrastructure. We need to build it in a sustainable, slower, profitable way. So lots of interesting opportunities there, and we'll have a look a bit more around Asia too at different other. Talk about some of them. I'm not obviously an expert on anything like that, but we can talk about certainly a bit more about Taiwan, and that is quite an interesting story there. Cool. Context of everything, obviously.
And the only other one I've been kind of following was the banking, like the Swiss banks and
Credit Suisse and all that is a big scandal.
And how that might have knock-on effects in the US as well. I just wasn't sure.
Interesting. Yes, the European banks, as I was saying before, sort of dominated things because the US had capital markets, so companies could raise capital, pretty much off the public through doing IPOs and that sort of thing. Whereas in Europe, companies generally raise capital through banks, and so the European banks are like very, very powerful, and it's difficult, like for small equity investors in Europe to really have any chance of making any money. Like, European markets aren't very, very exciting. Unfortunately, they have their place obviously, and there's I think like Amsterdam is like a big financial center, like outside of it's maybe like Frankfurt in Germany, that's a big one, and yeah, Amsterdam's one of the bigger financial centres in Europe, and a lot of hedge funds and stuff are setting up out of there. So quite advanced stuff going on there, so it's pretty cool. Yeah, but it's a very different landscape than the US, as I said, primarily because of like their relatively underdeveloped capital markets.
Yeah.
Whereas the US has always sort of had the most developed capital markets until technology kind of like, for example, like other countries kind of leapfrogged them a little bit with technology, and then they quickly caught up again too. Like I think, yeah, when all that was coming on board, and obviously the US has multiple exchanges. I think like the Nasdaq and the NYSE are both individually bigger than any other or all of the other stock markets. I think put together, something like that. That mate, yeah. Pretty insane. Yeah, Americans love their stocks, and yeah. Right, I think we'll pretty much have to leave it there for that one.
No, that's cool. Well, thanks for that.
No worries. And so this we're going to keep doing these every week, and I won't be sending out emails and bothering everyone every week with them too. So it's just like if you feel like popping in, pop in, and
I can make it every other week because I've got a meeting at 12. Supervisors meeting, so
PhD life, eh?
Yeah. So, but otherwise, I'll make it.
Cool.
Yeah, it's a good excuse to come out and get out of the house as well. So
yeah, that's what I like to hear.
Yeah.
Sweet,
well,
mate.
cheers for that.
You're welcome.